Hello everyone, it's Carson here with Remax, and today I am here to talk about the latest market statistics for last month, September 2024. Now, before I get started, if you see something weird on my glasses, that's because I have a green screen behind me, and likely it doesn't like the reflection from my glasses or the lens. So just don't mind me because, yeah, it is what it is, right? So some of you have been asking me how the market is, and I've been a little bit busy with both personal life and work, and so I haven't had a chance to give you guys updates recently. But that's what this video is for, is to give you an update, especially for those who are in the market of selling right now or thinking about selling. This will maybe help give you more clarity on where the market is currently at and where the direction might be going in the future or possibly the near future. So first, let me share my screen here. This is the newest latest release from the Greater Vancouver Realtors Real Estate Board, and you can see this was released on October the 2nd. And here it says home sales registered on MLS in Metro Vancouver declined 3.8% year over year in September, which suggests recent reductions in the borrowing costs, being the interest rates dropping, are having a limited effect in spurring demand so far. And then it further says Greater Vancouver Realtors reports that residential sales in the region totaled 1,852 in September of 2024, which is a 3.8% decrease from the sales recorded in September of 2023. So from the previous September, a 3.8% decrease in sales. And in terms of the 10-year seasonal average, this is a 26% drop, which is quite significant because if you look at the seasonal average, we usually sell approximately 2,500 homes in September, but for this year, we only recorded 1,852. Here our Director of Economics, Andrew Liz, says that real estate watchers have been monitoring for signs of renewed strength in demand in response to recent mortgage rate reductions, but the September figures don't offer the signal that many are watching for. And sales continue trending roughly 25% below the 10-year seasonal average in the region, which, believe it or not, is a trend that has been in place for a few years now. With September data, sales are now tracking slightly below the forecast. However, we remain optimistic that sales will still end 2024 higher than 2023. I'm not sure if this is the case, maybe because we have another policy rate announcement from the Bank of Canada this month, and I believe in December. But I'm very confident that at the very least, towards the first quarter or second quarter of next year, the activity should pick up a lot more. So continuing on, you'll see that it says here there were 6,144 detached, attached, and apartment properties newly listed for sale on the MLS in Metro Vancouver in September. And this represents a 12.8% increase compared to the properties listed in September of last year. This was also a 16.7% above the 10-year seasonal average. So you can see here earlier the actual sales was 26% below the 10-year seasonal average. And in terms of the actual new listings in September, there was a 16% increase in the 10-year seasonal average. So less sales, or you can, in other words, less demand, and increase in supply. And then in terms of the total properties being listed, you can see that there were a total of 14,933 properties in Metro Vancouver, and a 31.2% increase compared to September of last year. And this is a 24.2% increase in the 10-year seasonal average. And across all property types, the sales to active ratio for September of this year is 12.8%. And then when you break it down into individual property types, the sales to active ratio for detached homes was 9.1%. The sales to active ratio for attached, which these days we classify as a townhouse or townhome, is 16.9%. And the sales to active ratio for apartments or condos is 14.6%. So just a reminder, analysts say that when the sales to active ratio is 12% or below, or dips below the 12% ratio for a consistent or sustained period of time, it does put downwards pressure on home prices. And when the sales to active ratio is surpassing 20% or higher for, again, consistent period of time, which is usually several months, I would say 2 to 3 months or more, then that would put upwards pressure on pricing. And anything in between the 12 to 20, we're sort of at a balanced market. So here again, Andrew Liz has said that with some buyers choosing to stay on the sidelines, inventory levels have sustained healthy gains achieved over the course of this year, providing much more selection to anyone searching for a home. With this choice available, prices have trended sideways for the past few months, and the September figures, however, are now showing modest declines across all segments on a month-over-month basis. This downward pressure on price is a result of sales not keeping pace with the number of newly listed properties coming to market, which has now put the overall market on the cusp of a buyer's market. With 2 more policy rate decisions to go this year and all signs pointing to further reductions, it's not inconceivable that demand may still pick up later this fall should buyers step in on the sidelines. And I think that is very likely the case, that people who have been waiting for the sidelines will likely start to get back into the market again as the rates become more affordable. And and you gotta understand, it's not just the rates. It's not just as simple of the rates. It's a matter of how much those rates translate into your monthly mortgage payments. And then on top of that, with the stress test, you have to qualify at another 2% above those rates. And so that makes it a lot harder to qualify for an amount that you want to qualify, and then stack that on top of, which means you'd have to come up with a bigger down payment, but then stack that on top of high payments each month, and with most of the payments going towards interest. It's really unappealing for many buyers. So I can see and I can understand why many buyers are still waiting on the sidelines, but I can also foresee that once the rates come down even more, that more and more buyers will start stepping in, and then it will become busier, which will become more difficult potentially for buyers when there's more competition on the buying side. So here it says that the MLS home price composite benchmark price for all residential properties in Metro Vancouver is currently 1.179 million, and this represents a 1.8% decrease over last year, September of last year, and a 1.4% decrease compared to August of this year. Sales of detached homes in September of this year reached 516, which is a 9.8% decrease from the sales recorded from September of last year. And the benchmark price for a detached home is 2.022 million, which represents a 0.5% increase from September of last year, and a 1.3% decrease compared to August of this year. So sales of apartment homes reached 940 in September of this year, which is a 4.9% decrease compared to the sales in September of last year. And the benchmark price of an apartment home is 762,000, and this represents a 0.8% decrease from September of last year, and a 0.8% decrease compared to August of this year. And then lastly, we have attached home, which is again townhouses or townhomes. They total to 378 in September of this year, which is a 7.4% increase compared to September of last year. And the benchmark price for a townhouse is 1.099 million, which is a 0.5% decrease from September of last year, and a 1.8% decrease from August of this year. So that is for Metro Vancouver. Next, let's take a look at the Fraser Valley news release, which was also on October the 2nd, and you'll see very similar sentiments from the report here. So it says, with active inventories hitting levels not seen in 10 years and sales 30% below the 10-year average, Fraser Valley real estate is building towards a buyer's market if sales continue to lag. The Fraser Valley Real Estate Board recorded 982 sales in September, down by 8% over August, and by more than 10% over September of last year. Again, Seasonally adjusted sales were the second slowest in a decade in the Fraser Valley. And here, Jeff Chada, who is the chair of the Fraser Valley Real Estate Board, says, with 3 rate cuts already and more expected before the end of the year, buyers are watching the market closely to time their purchasing decisions. The current conditions should favor buyers, particularly in the detached market. However, until we start to see some movement in asking prices, properties will continue to sit on the market for extended periods as both buyers and sellers await the next rate announcement. So what he's saying here is um, sellers or homeowners or landlords who have their property currently on the market, um, I guess, have not or been reluctant to reduce their price, or if they have been reducing the price, it's not as much as what some potential buyers are looking for. And so we're sort of at a stalemate where sellers are not really wanting to reduce the price, but buyers are not willing to step in. And so properties are sitting on the market for longer. And then as time progresses, you've got more properties coming or more listings coming onto the market, which again creates even more competition from the seller's standpoint, and an excess of abundance from the buyer's standpoint. So it says here, new listings rose in September, up 21% to 3,352, an increase of 17% year over year. Overall, inventory increased 5% from August to September to 9,045, and that's up 39% over last year, so almost a 40% increase. With the combination of declining sales and rising inventories has created a balanced and in some cases buyer's market conditions in Fraser Valley. And Baldev Gill, who is the CEO of the Fraser Valley Real Estate Board, says, we know demand is there among Fraser Valley buyers. After months on the sidelines, buyers want to get into the market, but many also need to sell before they can buy. When you factor in the affordability challenges and the anticipation of more interest rate cuts, where we are seeing persistent weakness in the market. In conditions like these, we encourage buyers and sellers alike to talk to their realtor to assess the risks and opportunities before making the decision. So yeah, from the homeowner or landlord's perspective, those who are either looking to upsize or downsize, or maybe they just aren't able to afford their mortgage payments because they're up for renewal, or for whatever reasons they're moving to a different province or out of the country, they're separating, the husband and wife separating, whatever the reasons are, they need to sell and get that money or their equity back before they can use that money to buy something. So it's sort of like a cycle, right? Because if they can't sell, they can't buy, right? And those are also potential buyers as well. So it's not just people who are getting into the market for the first time or getting back into the market, but it's also for existing homeowners who are also looking to trade up or trade down. So further here, it says, across the Fraser Valley in September, the average number of days to sell a single-family detached home was 35, while the condo was 37, and townhomes took an average of 30 days to sell, so about a month or so. And that's the average. So that's on the assumption that the property is priced at the fair market value. If it is priced lower, obviously you may have an easier time, getting the home sold. And if it's higher, then it'll probably sit on the market for longer, because again, there's more properties, more listings on the more inventory, on the market, which means it's just more abundance for buyers to choose from. So they may not necessarily choose yours unless you have something very significant over the other homes. And usually it comes down to price. So benchmark prices in Fraser Valley dipped again in September, with the composite benchmark price down 1.4% to 978,000. So broken down by the different categories, single detached homes at 1.5 million, the benchmark price for a Fraser Valley single detached home decreased 1.5% in August of this year, and decreased 1.3% compared to September of last year. For townhomes, it's at 834,000, which is a decrease of 1.4% compared to August of this year, and a decrease of 1.6% compared to September of last year. And then apartments, it's 585,000, which is a 0.2% decrease compared to August of 2024 of this year, and an increase of 0.4% compared to September of last year. So again, I think you'll see that everything has decreased except apartments. Apartments decreased a little bit or slightly. It's roughly flat on August of last year or August of this year, sorry, but it increased by 0.44%, which is again close to flat from September. And the reason why this is it's affordability, right? The average benchmark, or the sorry, not the average, the benchmark price was 545,000. So that's something I think a lot more palpable, something that's easier for people to absorb and adjust, and especially for those who are on the market for the first time, it's a lot easier for them to absorb. And I just want to bring up something else here, which is we have a spreadsheet that we create each month, and we accumulate it. And this allows you to get sort of an overall summary picture of each of the housing categories: detached, townhomes, and apartments. And you can see the benchmark price month over month. You can also see the active listings month over month. You can see the new listings month over month. You can see the sales transactions month over month. You can see the average days month over month. And you can see the absorption rate, which is essentially the sales to active ratio. And right here, we, as a little reminder, we put down here when the absorption rate is above 20%, it's a seller's market. When it's below, or when it's between 12 to 20, it's a balanced market. And when it's below 12, it's a buyer's market. So you can see that every month for detached home, for at least the last 9 months, it has been a buyer's market. On the townhouse side, it was a seller's market, and it's sort of fluctuating between a seller and a balanced market. This is for Metro Vancouver, by the way. And then for condos, it has sort of been it started out as a balanced market, and then it started to continue to be seller's market, and now it's coming back down to a balanced market again. And then for Fraser Valley, over here we have detached again, townhouses and apartments. You can see detached has been a sort of balanced market, but now it's trending down towards the buyer's market. In terms of townhomes, it was a balanced market, and then it was a seller's market, and I guess after July it started to now tread towards a balanced market. And then you can see apartments started out as a balanced market, but started to head towards the seller's market, but now heading back down to a balanced market. And I guess if the trend continues, it'll probably head down to a buyer's market. And so this is probably in line with these reports here. Here you go. This is for Fraser Valley, sales to active. So you can see again, it was, and this is for all types of properties. It was, at least in 2023 and towards the first half of 2023, it was a seller's market, and it started to trend down to a balanced market. And then towards the end of 23, it went up again, towards pretty much until, I guess, very first quarter of 2024, and now it's trending down, and now we are, in terms of all properties, we're slightly just at the buyer's market. And by the way, if you want to get access to all of this information, we have it saved in a link, and I will put that in the description below so that you can go over all these numbers yourself, and you can take a look and you can see the trends. We have the past history as well, from the last few years at the very least, and of course every report for Metro Vancouver at least, it also gives you a rough idea of the sales prices as well from the last, I don't know, 20, 30, 40 years. So you can see from 1997 to 1977 to this year, we can kind of see the price trends going up. Obviously, price trend, I believe, is not adjusted for things like inflation. So monetary policy. So obviously, $1 million home back in 1977 would not be the same as $1 million in today's market, but still gives you a rough idea how prices have been climbing. And so yeah, I hope this was helpful and informative. I think overall, what the takeaway from this is that yes, the market is slower. If you are selling your home, I would suggest having the expectation that it could take anywhere between 30 to 90 days before you see an offer. activity may be slower. You may not have as many people coming to your open houses or appointments to show the home. And that is normal because we have seen a decline in demand. We have seen buyers step on the sidelines, waiting for rates to come down more. But as rates do come down more, I am confident. Um, uh, for example, they're saying here that towards the end of 2024, which we're just 2 months away towards finishing 2024. Sorry, 3 months, 2 months away. Yeah, 2 or 3 months. Yeah, 3 months. Let's just say because October just started. So we're on the last quarter right now. Um, I don't know if it'll be as they say, but I'm confident that at the very minimum, towards the first quarter or second quarter of 2025, things will pick up. I'm hopeful it will pick up towards the end of this quarter, but it's hard to say. It may start to slowly pick up. Again, it's hard to say, and I'm not guaranteeing that it will pick up in the first or second quarter of next year, but um, logically, it makes sense. When rates come down, affordability comes down, people are now suddenly more interested in buying homes, unless something significant happens, which I cannot envision. And there have been a lot of talks about changing housing policy. I know with the new government, provincial government now campaigning for each party, they are also coming up with different um, policy and platforms for housing, and so that could change the landscape of real estate for better or for worse. And so I think that's also created some uncertainty for buyers and potentially some sellers. But overall, I'm still very confident that within, let's just say, 3 to 6 months, we will see a shift in the real estate market. So if you are selling your home, uh, don't lose faith. Just be a little bit more patient. You'll eventually get there. Now, if you are in a rush to sell, then you may have to find an alternative. Either you have to adjust your price to be more in line with what's out there and be more competitive so that you can find a potential buyer who's willing to take on purchasing your place. Or if you aren't in a rush, maybe you can wait a little longer. Or if you're in a rush but you don't want to take too much of a hit or a hit on your home, then you may have to find some alternative lending options to tide you over until you can get to the next shift in the real estate cycle. So that's it. I hope this was helpful and informative. If you guys do like what you see, please click on the like and subscribe, because that really helps me. That really helps the algorithm that tells other people that what I'm doing is helpful, and this will share it with other people as well. And hopefully I'll see you guys in the next video. And that's it. Thank you. Bye-bye.